Major funding for these broadcasts has been provided by grants from New York Community Bank, AmTrust Title Insurance Company, Perfect Building Maintenance, M&T Bank, Customers Bank, Marks Paneth LLP, Ariel Property Advisors, Sterling National Bank, Capital One Bank, Collins Building Services, Meridian Capital Group. Additional support has been provided by grants from AVR Realty Company, Amerant Bank, Bank of America Merrill Lynch, B6 Real Estate Advisors, Briarwood Organization, Chase Commercial Term Lending, Chase Commercial Mortgage, Citizens Bank, CPEX Real Estate Services, Douglaston Development Levine Builders, Flushing Bank, Friedman LLP, Handler Properties LLC, Handler Real Estate, Hodges Ward Elliott INC, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, New York's Window Company, Matone Group, New Banks, Newmark Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rockefeller Group, Rosewood Realty Services, SJP Properties, Stonehenge NYC, TD Bank, Terra CRG, the Merengoff Family Foundation, and these friends. Everyone wants to live in New York City, so where do people live? They live in rental apartments or they buy apartments. Most people rent apartments. So today I've assembled, or should I say one of my guests, who I will introduce, has assembled this group of real estate leaders to talk about what's really happening in the rental market. My guests today include Martin Nussbaum, principal and co-founder of Slate Property Group, Chris DeAngelis, who's the principal and president of Triarch Real Estate Management, our executive producer, Joey Kosum, Senior Managing Director, a.k.a. Joey One Cap at Marcus & Millichap. And last but not least, Danny Rublin, who is the co-founder and principal at Daylin Management. So, since you have assembled this group of esteemed people, and you are the investment sales expert, how's the market?
The investment sales market, velocity's down on the multifamily side. Probably about 50% since last year, this quarter. Fortunately, we've been up. We have about $650 million.
What do you attribute?
Contract.
We have other people here. What do you attribute a 50% reduction?
There's a lot of uncertainty in the market with the upcoming rent laws in June. That's creating all this uncertainty and stopping some of these operators that I'm sitting amongst today from investing when they don't know how to play the game when they keep changing the laws.
Martin?
I think there's a look at every single law that surrounds rent regulation and the deregulation of apartments and the ability to increase apartments. So I think it starts with preference and the ability to maintain preferential rents versus what you're actually renting apartments for. And then I think most importantly, where I think it could be the most impactful is how do you go about deregulating a rent stabilized apartment if someone moves out of that apartment or passes on. So
and what about the major capital improvements, the MCIs?
Agreed. So I think that the MCIs are going to be impactful also. And I think what Joe said earlier is it's just put a pause on everyone's ability to properly underwrite deals and look at them in a way that you can feel comfortable with your business plan.
Over the last couple of years, you bought up properties in the Chelsea market. Where do you see the best opportunities? Are there really any opportunities in New York City because certain people aren't selling?
I would echo most of Martin's sentiment, which is to say, high level, where, because of all the uncertainty in Albany and around the laws, I think there's a large pause, and we're generally in line with that pause. There's already a certain amount of risk inherently in buying real estate to begin with, so this just adds a whole nother layer of risk. However, look, as a result of this, there is less competition. So For us, for example, we bought a block front on 8th Avenue right across from the Google building. We feel it's irreplaceable long-term real estate that we want to own.
And look at all the people who are in the tech market. There's a limited number of units, and it's always going to be there. So part of this situation today is, people will rent at a certain price. What's the price?
With the rent laws, obviously, that's a pause. If I brought you a business to invest in and told you they were changing the rules in 2 months, you wouldn't invest in that business right now. But on the other hand, I think that creates opportunity for people who do know, once the laws are in place, if we're good operators and we're good at executing and running these buildings, then that creates opportunity for us, and particularly if you know how to navigate the guidelines. For me personally, it's a cyclical business. So, I've been at this about 20 years. The dot-com crash, historic rise till 07, the greatest recession since the Depression, and now this another meteoric rise. It's only natural that the market softens. Where I found some value in a softer market is student housing. So we have a property down by NYU, one we're building up by...
Now, what are the rent regulations on student housing?
One's new construction, so we're not dealing with rent regulation, and the other one were a mix of condos and co-ops. So we didn't run into regulation risk on those. I don't think regulation is the only challenge we're facing. The other one's property taxes. Yep. And how do you deal with the city? It used to be 25%. Recently, our attorneys are telling us it's 30% of gross revenue is what you need to start underwriting to. There's not a lot of ways to navigate that unless you're building ground up with 421A, you go opportunity zone, or you find a business plan where the revenue is high enough to absorb those taxes.
On this panel over here, you're the only one who's done really ground up. How do you see the changes in the affordable rental housing bill have an effect as compared to the old 421A?
Yeah, I don't think it's that impactful. I think that in certain locations it's actually beneficial to the underwriting, depending on sort of the variances between what market rents are and what you're able to charge on the affordable, based off the affordable rates.
Right. I think you're getting a higher charge than you were before.
Correct. But you're giving up a larger percentage of the building to be affordable. So I think there's math inside of that where it becomes very similar to one another, and I think in secondary and tertiary locations it actually benefits the deal. In primary locations, I think it actually hurts the transaction.
Right.
I think in Manhattan there hasn't been a ton of ground-up rental product at all because you're not able to underwrite it. So when you're thinking about ground-up rental, you're really thinking about the boroughs for the most part.
What are you seeing in the Bronx?
The Bronx is a market last year that was actually the only market that was up in pricing. We're seeing a slight decline, but you're seeing a lot of institutional capital in the last year and a half that went to the Bronx in terms of the ground up projects. But obviously it's the most affordable borough, and that's where a lot of investors were headed that way. And we're still seeing multiples north of 10 times the rent for some of these fully rented
Andy, have you
buildings.
looked up in the Bronx?
We've owned in the Bronx over the years. On our lending platform, we're actually seeing a ton of action in Brooklyn, mostly ground up, as Martin said, some rental and condo as well.
You've done downtown Brooklyn and you've done Long Island City, right?
Yeah, we have development sites in North Williamsburg, East Williamsburg, downtown Brooklyn, Park Slope, Bushwick. We also have one site in Astoria and one site in Forest Hills.
So where do you see the best opportunity for rent growth of those sites? I mean, Williamsburg, there's the question of what's going to have an effect on the L train. It's great having ferries, but you need subways also access over there.
One other area I didn't mention, which is the one I actually am most bullish on location-wise, is actually Clinton Hill. I actually think that area has, as we have built and been in that market now for 3-4 years, has transformed significantly, and it's very interesting to see the demographic of people that are moving into our building there, as well as the retail that's moving into the area.
And what are your rents there?
We are high 60s on a gross basis. We're high 60s, which compared to some of our rentals in East Williamsburg are the same numbers, and so it's a very similar type of tendency at this point that are moving there.
Prior to the show, we brought up the subject of co-living, which has been getting a lot of play. Common has raised a lot of money. Ali has raised some money over there. How do you see co-living today in general?
Well, we have a few properties where there's leases in place with co-living companies. I certainly think it's prevalent enough that it's not just a trend anymore. It's how a lot of young people are renting, but it's for a very specific group of people, who are either coming to the city looking for some sense of immediate community, don't necessarily have a group.
Is it immediate community, or is it rent savings? Or is it both?
I think it's both. Well, the concept of living with roommates is not, right? It used to be Craigslist. So I can't afford an apartment on my own. I need a roommate to subsidize the cost. So I think the subsidy is a big thing. They have sort of institutionalized the ability to find roommates and then tried to extract the problems of having roommates, right? When we buy near universities and hospitals, there's a real demand for housing all the time. So like I was saying earlier, as the market softens, I'm only seeing, we have about 57 properties. Our rent growth is sub 2% over the last 2 years. But in my buildings near schools, I'm north of 4%. And that sort of screams to me of look what's going on here. You can manage turnover and vacancy much better.
New York City it's the educational capital of the world. It's the healthcare capital of the world. And all these people need housing. So,
Right.
It's a perfect situation when you're talking about something near Columbia or NYU. I mean, even downtown Brooklyn, where you are, NYU has made a major capital improvement when they took over Poly.
Yeah.
And, there's additional things. I see great opportunities with life science. Alexandria and everything else is developing over there.
The downside to the residential by hospitals and schools is it is slightly commoditized. You're not going to get the bump in a great market that you might get in luxury product, but you're not going to take the dive in a
You have stability. You have stability. You have
I'm the son of a lawyer. It's a very conservative.
Right. No, it's a stability type
For
of
your
situation.
project in the Village, you'll have a potential.
I think a great example is the American Copper building, Michael Stern's building. It doesn't matter what the rents are. The doctors from NYU need a place. There aren't too many places that they can go, and that's the situation. How do you see Long Island City today?
I think Long Island City is actually a very strong, stable market. I think it's going to take some time for all of the supply to sort of get absorbed. But once it's absorbed, I think it's a very sustainable market. Again, we have a site that's on the fringe of Long Island City in Astoria. We spent a lot of time studying it. And I think that ultimately within the next 3 to 5 years, there's going to be a very strong residential market. And I think retail is going to follow very quickly thereafter. So we actually are actively pursuing a couple of sites there. And I think that in the long run,
I think Astoria is a great market. I think it's an existing market where they have the sites over there. They have the retail,
It also has a real neighborhood community feel to it. It's a legitimate community that's been around for a long time.
I think Long Island City was a really strong market. I think it had this interesting thing that occurred to it as a result of Amazon coming and then going. But it was strong before, and I think it's strong now. And because of all the noise in between, that got lost in the shuffle a little bit.
I think one of the things that we've looked at a lot is the start and stops of ground up development, like when it was peaking and when it slowed down. And I think when 421A fell out for the 18 plus months that it fell out of ability to use it, there was a huge pause in the land purchasing space where for at least 18 months, no one was able to really buy a piece of land and underwrite a rental because without the tax abatement, it was very challenging based off of costs. And if you look at it, in 2019, the amount of starts of new ground-up rental is down probably 75% off of where it was over the last 2 years, which means that within time, you're going to have an ability.
Right, the cycle 2 to 3 years down the road, the cycle.
Correct. There'll be a period of time where for about 12 months, there will be very little new product coming to a market. And there's still, as we were saying, a huge amount of interest in rentals. I think there'll be an opportunity for absorption and supply to sort of clean.
And I'm already starting to see it from the sales side where there's a flight to quality in terms of, some of the larger operators of these rent-regulated buildings are moving towards buying in the boroughs of these 421A buildings. One QPS just sold for $300 million, which was a sub-5 cap, to an owner that's never purchased outside of Manhattan before.
And I would add to the rent growth story, I think a lot of people feel supply is going to be muted in the coming years. It's obviously a business where you can sort of see what's coming a few years in advance. And with these new rent laws, ultimately a lot of the unintended consequence may be that it may mute how many apartments can be deregulated or how many people are going to be moving between apartments because their rents, were altered for some, for one reason or another. So I think the combination of the two could yield a situation where there's significant rent growth over the next few years.
What about the Heights? I mean, Washington Heights and Inwood, similar to the Bronx, has great bones and great opportunities. Have you pursued that market?
We have not.
We have a bunch of properties in Washington Heights. I've been buying up there since about 2008. Very different than the Bronx, though. I mean, transportation's much better.
Right.
Tenants can be to Columbus Circle in 2 stops on the A train from 168th Street. You have the hospital up there. You have Yeshiva. The real drivers for housing, for economy, right? So when I worked for a real estate developer, everything was about you want to be by transportation and jobs. And Washington Heights has both. I'm almost surprised it took as long as it did to grow. Whereas the Bronx stuff, to me, I don't look in the Bronx, I don't have anything there, but I think what you see is as markets heat up, right, and the Manhattan market got sort of overheated a couple of years ago, really, there's this flight to find value or yield somewhere, and it turns into places like, East Brooklyn, the Bronx, and I think as the market starts to soften, you see those areas contract a little bit. Washington Heights doesn't really fit that category. It's a little more workforce housing, and because you have these institutional users up there, there's always a market to rent an apartment. At least that's been our experience.
Joey, are you seeing development sites trading at reasonable numbers today?
So, like Martin said, there hasn't been a lot of development in Manhattan for rentals because you can't make the numbers work. We just got hired.
Not that much land.
Correct. We just got hired on a site that we launched this week on 36 in Madison. It's 40,000 square feet buildable, and we're starting to get interest in that 550 buildable pricing.
But that at 550 buildable pricing, you're not building rental, you're building condominium.
You got to make condos work on the corner of 36 and Madison.
We were talking before briefly about maybe due to the changes in Albany, certain people might develop condos again. Or are you thinking of doing that yourself?
Yeah, I think that, we're exploring it, and, we're not taking like a walk-up building in the middle of the West Village and trying to create something outside
Francis
the box.
Greenberg did very well taking
Not
walk-up
that it
building.
He did.
Okay.
Not that it can't be done.
Okay,
but
he took these properties and he converted them. It was an interesting thing. You're in the for sale business. How do you see the for sale market?
Yeah, I would shy away personally from getting into condo projects, new condo projects today, unless you have some inside track on something and you can really underwrite the right per square foot exit. It's very challenging to do when you're trying to buy land at $550 to $800 a foot to still be able to sell into a market that feels comfortable.
But there are trades happening in the Upper East Side alone. There's a trade that's closing this month at like close to 700 a buildable. And there's like 9 or 10 projects. Martin and I talked about it recently. Is it going to all get absorbed at what pricing level?
Right. You have all the Second Avenue developments, which were dead for many years. Now they're all coming on board. It's going to take time, okay? If you take into consideration the Kent, which was built by Extel a number of years ago, it's completed, and they haven't sold out.
I think your point on that is right. I'm not as concerned about the price per foot on a lot of the units that are selling. Obviously, we're not talking the super high end.
I'm not talking about the luxury.
Right, but let's just say sub $7 million apartment, the $3 to $7 million apartment. I think the real concern is around velocity, right? So like the Kent, which I'm familiar with because I live around the neighborhood, it's going to take a long time to sell out that many units. So if we're looking at some condo projects, which we have 2 or 3 of them that we're in construction on now, it's sub 40 units.
John Catsimatidis, who's bullish and who's made a lot of money and is a very successful businessman, is bullish about Coney Island. My problem with Coney Island is it's a commute. It's an hour commute. And even though they're going to have ferries over there, any thoughts about that other part of Brooklyn, like Coney Island, like East New York and other markets?
My opinion is I think that with time, they're going to do very well. I don't think you necessarily have to measure them against getting to Manhattan as opposed to potentially other locations within Brooklyn. So I think that as Brooklyn continues to sort of develop, which it is at a rapid pace, I think that those neighborhoods are going to benefit from the commute from there into Brooklyn as opposed to the commute into Manhattan.
Right. Glenwood took over the Taconic sites and are building 3 affordable buildings.
Right.
Okay. they can build affordable because they're based on the prices and the tax advantages, and they really aren't looking for a high yield. So there's a situation. What about Prospect, the former Forest City property next to the Barclays Center? How do you look at that as a market? I mean, it's downtown, but it's not really truly being downtown.
I personally think it's next cycle. I think that in the next cycle it'll get a push. I think it's going to be pretty challenging for today. I think there's a lot of other neighborhoods that you can move to first, but in the long run, it's great real estate.
I used to work at Forest City, and I left in '07, but that project was underway, at least the master plan for it. I mean, look, 2007, so 12 years ago, nothing in Brooklyn looked like it does today. We were talking about downtown Brooklyn earlier and some of your projects there. I mean, if you looked at a picture of, I worked at Metrotech, if you looked at a picture of that area 10 years ago to today,
Right.
it's incredible. I mean, I think the point about these other areas need to sort of go through a couple cycles. Maybe it's next cycle, maybe Coney Island or further. I don't know about East New York, but further out, they require 2 or 3. Because every time you hit a cycle, people start to move back a little bit closer, and then the market gets good, they move a little further out. That has to mature.
Do you see the opportunities near the Navy Yard for development today?
Today, I don't, but again, in the long run, over the next 5 to 10 years, I think it's going to be phenomenal.
But in a way, perhaps the Navy Yard development sites, as opposed to talking $500 a foot, might be $200 a foot. And for the long term, 3 years down the road.
So where do you need to be to make those numbers work for a site in Brooklyn downtown
You
for
need
rentals?
to be at 200-ish a foot, which is just not where land trades.
Which is not where.
How
are the lenders looking today for development?
I think it depends on your appetite for leverage. If you're comfortable in the 50 to 60% leverage range, then there's a lot of savings banks and local community banks that will provide financing for you at very reasonably priced numbers. If you're looking for 70-ish plus minus, then you're starting to deal with a lot of the debt funds. And quite frankly, I think the debt funds are as aggressive price-wise as some of the banks. And I think
if you take a look at what Silverstein's debt fund did over there, one decal. I mean, they took a major commitment over there.
Yeah.
I mean, we're developing in Morningside Heights right now. And a similar story, I mean, we're about 63%, but the rates were incredible. I mean, we're L sub 300 easy, and multiple banks, not private, competing for it.
Yeah, it's because you gave your personal guarantee, and it's very valuable.
Exactly.
There's no 421A on that either, right?
No 421A,
no
all
tax
market rate, purpose built for students. But there was a lot of competition for it. Look, there's not that many deals right now, non-condo particularly, to finance. And rental product is bread and butter, right? So if you can find that.
Is Harlem seeing a resurgence? I mean, are you looking to buy apartments there?
We own in Harlem and have owned there a lot over the years. Again, it's probably not too far off of what you see in Washington Heights. It's probably half a level up in terms of it's relatively steady. It's continued to improve. I've been in the business 15 years, and it's one of these markets that doesn't go wild in the positive direction, but isn't going to feel the downturn.
I mean, but with the rezoning of East Harlem, do you see great opportunities over there? I mean, the Lexington Avenue line is at 116th Street and 125th Street.
So look, there's always opportunity when they rezone, and it creates new opportunity. To me, I think the value is in Queens, and similar to what you were saying earlier, Queens is like a real community. People live in Queens, right? It's not transient. Harlem's a little bit more transient, and it feels that way. I found the challenge of Queens is breaking into the market. You guys have a pretty good opportunity there, but it's very mom and pop controlled still. It's hard to get into the market. It has a lot of the fundamentals.
But what Martin was talking, Kew Gardens, Forest Hills, is a great commute. It's a great location.
I was going to say, I think Queens in general is a great commute. The transportation in and out of Queens is very strong, and that I think, and it's very close. It's a lot closer. When you're in Astoria or Long Island City, you get to Midtown, it's easier to get there from the Upper West Side.
Yeah, and you also have the ferry option as well in some parts of Astoria.
Yeah. I also think that the regulation that's coming in June is going to really impact how we all look at buying existing buildings in these submarkets, because there's a big rent regulated component to most of the buildings unless you're doing ground up development.
But, Chris is involved with student housing. What's your thoughts about student housing? I think it's a great opportunity.
I think it's a great opportunity. We haven't gotten into it other than we have catered a lot of our buildings to students, right?
Right, so you may not be in official student housing, but many of your buildings, and the same thing for Danny, are basically student
Yeah,
housing.
we have a couple of buildings on the corner of 33rd and 3rd Avenue, and I would say at least 50% of the building is filled with students. You know, not intentionally, but the kind of unit mix and the kind of product that we're delivering really, you know, speaks to that kind of renter.
I think the distinction is probably, because you're right, a lot of people who own in the East Village or in neighborhoods that are traditional young renters, it's similar tenant base. The distinction is probably we're delivering a turnkey living experience. It's fully, so mom and dad don't have to buy furniture. They're not paying brokers. We include utilities. So it's really a seamless entrance into this housing market versus going to the East Village, renting an apartment with or without a broker. You have to buy furniture for your kid who's going to live there for 2 years.
How are you priced compared to dorm?
Yeah, I was going to say, what's your premium?
So so we're not a dorm. They're Class A apartments, kitchens, bathrooms. We're obviously more expensive, which means that you really need to sort of geocode where your students are coming from. You need to be near universities like NYU and Columbia, where enrollment consistently goes up.
Right, as opposed to New York
people
Tech,
pay.
okay, or a community college or
Right.
something like that.
Right.
So I mean, in summation, even though we have cloudy skies due to Albany, I think the market is there, and I think people are going to continue to rent. I think certain people are going to be involved with co-living. You know, I think not everybody's out there for that opportunity, and I think all in all, the New York City rental market is strong. I'd like to thank Martin, Chris, Joey, our executive producer, and
Sun's
Danny.
always out for Joe.
Okay.
We're in the real estate capital of the world.
Okay.
You buy long-term in New York, you're not going to go wrong.
See you next week. Thank you.